so excited about what we're going to talk about today because, we talk about money all the time, and we talk about helping people solve their money problems. And every single person I've ever met has one money problem in common. You know what that is?
They don't have enough of it.
Very close. They all want more of it. They all want to make more money. So that's a common money problem. And what we're going to talk about today is we're going to talk about how we're solving money problems all throughout the United States and Canada. I can't leave our northern partners up there out because we are helping a lot of Canadians, but how we're helping a lot of people solve that money problem. And also we're going to show how we're helping a lot of people with another money problem. And that is that they need money to make more money. So some people have money and they want to make more money. Other people need money to make more money. Let me ask all of you right now, one of two, you're going to fit on one side or the other. How many of you have money and want to make more money? I want you to type in A. Okay.
And before, Chris, real fast, before they do that, everybody real fast, on the chat box where you're typing into your chat, right above, there's a little blue box right there. If you click on that blue box, pick panelists and attendees, because we want everyone to be able to share together, and we want everyone to see each other's responses. And if you send it just to the panelists, then only Chris and I can see, and nobody else can interact with you. And part of the fun thing about Zoom is we're able to see each other, we're able to talk with each other. We're not in person, but we can still interact by doing it that way. So if you guys just change that to panelists and attendees and put your answers in, I think it'll be a lot more fun.
Awesome. All right. So let's do this again. You guys ready? Everybody change that little thing so it says all panelists and attendees. And here's what I want you to do. If you're somebody that has money and you're looking to make more money, I want you to write heads. That's right. Just like a coin, I want you to write heads. Okay. So type that in. And if you're somebody that needs money to make more money, I want you to write tails. So heads or tails, what side of the coin are you on? Do you need more money to make money, or do you have money and you want to make money? So let's see what comes in here. You're either heads or tails, heads or tails. Look at that. It's about a 50-50 shot. We got lots of heads and we got lots of tails here. So, man, I didn't expect it to be that equal. Steven, that's pretty freaking cool right there. You know what?
We've got one heads and tails.
Well, that happens from time to time too, because sometimes people have money and they want to make more money on the money they have, but they still need money so that they can scale their business. That's a really good one. Oh, Rodney is on the edge. So that's what we're going to talk about today. We're going to talk about the third side of the coin. And what we're going to teach you is not the heads or the tails. That's what side you're on. We're going to teach you about the edge, like Rodney mentioned. Rodney is on the edge. And what is the edge of the coin? It's the third side. It's the side that brings the heads and the tails together. And we have come up with something. Well, actually, Stephen, when did we come up with this idea? Like, when did I start talking about this on the napkin?
Well, you started. Yeah, that's true. It was, that was I think in Arizona, maybe. We were at an event back in 2019.
Was it that long ago?
Yeah, it would have been 2019 is when you started talking about it. And then we were getting ready to launch it, and then COVID hit, and we kind of had to redo everything from live events to virtual events. And now that we've kind of had a really amazing year of just being able to bring people in from all over the country through virtual, through what's gone on, and everybody's used to using Zoom and everything. Now we've really learned from our students and our members and our clients and our friends and our network. And it's kind of went from that original idea on the napkin at that event in 2019 to starting to come together. And we kind of did a soft launch in April with some of our founding members to start bringing some people in. And I mean, it's just starting to really take off right now. So I think the timing is perfect, and It's amazing what's going on.
Yeah. And it might have even been 2018 that I started drawing this little circle that I often talk about on, I can't wear these anymore. We're going to give those away to somebody. So stay with that. It's going to be either somebody on the heads or the tails of the coin that are going to get those glasses. That narrows it down for you, right? Anyway, I started drawing on this piece of paper, this circle, of heads and tails. And the whole reason for the circle and this whole concept is I was a lender, because one of my mentors back in 2014 in those hard times, Greg, told me the ultimate in this business is being the bank. Well, I was always the one borrowing. I was always the one that needed money to make more money. But I was also somebody that was starting to learn about having money and wanting to make that money work. So The problem I had when I first started being the bank is people would bring me real estate deals to lend on. And every single one of them looked different. They were always incomplete. Sometimes it was literally just like a one pager. Hey, I need, $200,000 for this deal. Here's the address. And I'm just like, dude, like, number one, I'm not going to like look it up. Number two, can you like put some effort in to tell me what it is you got? And, I, through this journey of like doing some lending deals or being part of lending deals with other investors that had more money than I did, what I'd found is that it was a pain in the ass. Like people would bring me deals and every deal was just so incomplete. I spent more time going through the deal, telling the borrower how to actually be a borrower. Like, okay, you need this. Okay, I'm going to need that. I'm going to need this. Oh, you don't have that in here. Are you an entity? Oh, you don't even have an entity set up. So there was all these like learning things that I had to teach people. So I finally said, well, what if I just created a template, a way for all the borrowers to actually be able to, just fill out this template, I commonly called the spec sheet back then, that then would give me at least the bare bone basics of the deal. So I knew, is this a deal I would lend on or is this a deal I would just pass on? Then I started saying, well, yeah, but then I want them to do more work. Because if I'm the lender, I shouldn't have to do any work except for look at a complete packet. You know how I learned that, Stephen? The bank. Yeah. Every time I brought a deal to the bank, does the bank ever just like, make a decision on just a piece of paper? No, they want everything. Okay, well, we need this and we need that and we need this and we need this and we need this and we need this. And when you have all of that done, we'll actually look at your deal. Until then, there's the door. See you later. Oh, don't forget the dumb sucker on the way out. That was like the experience. So I said, if banks don't want to look at a deal unless it's complete, why are we? So we created this model, okay, which back then was for self-serving so that we could lend more efficiently, lend safer with less risk. Obviously, the whole idea was to be able to move our money, okay, to make our money move for us and make money more efficiently. So faster, smarter, and more efficiently. Those are the main things. And today, many years later, we have basically now coined this napkin, this circle on a napkin, as the Private Money Club. Now, I want to be clear for all of you heads and all of you tails, what we're going to talk to you today about is not like how you can be part of Private Money Club. Look, after today's training, if you want to be part of Private Money Club, ask. We're not here to sell you Private Money Club. We're simply here to explain how this solves your money problem. And I think the best way to do this, Stephen, is really to spend some time going through some different case studies and different things that are happening. Because how long ago did we even launch this?
Just in April.
So
last month.
Oh yeah, last month. That's right. It's a month old. It's been in design and development for a lot longer than that, but we launched it a month ago, but we've been working on it since 2019. So sometimes an idea that all of you have ideas, right? Sometimes that idea doesn't actually happen for years down the line because there's so much work to this, so much stuff that you got to figure out before you can ever even bring it out. And I've tried bringing it to the public and it bombed. We didn't understand what it was back then. And now we fully understand it. And now what we understand too is how effective it is. And that's the thing that blows me away. And so let's just, a month ago, we launched this thing. And the whole idea is when you're in your car driving down the street and there's stoplights, you've all seen them, stop signs and stoplights. But if the stop light says red, what do you do?
Stop.
If it's yellow, what do you do?
Slow.
Well, some people would say hit the gas. And if it's green, what do you do?
Cruise on through.
That's it. So we just created a stoplight. If somebody that has money and they want to make more money, if they have that money, they're green. So we created a stoplight. You put a little green circle next to your name. If somebody has money or maybe the money's out, but it's coming back inside the next month or 2 months, you put yellow because you're just about ready. You could hit the gas or you could stop. Okay. You could say, I'm going to pass on this one, or you could hit the gas. And then if your money is out and you don't have any right now, but you want people to know, hey, here I am, just like the billboard that's at every single stoplight, you're the billboard. Here I am. I'm a lender. My money's all out, hence the red stoplight, but don't go by me. Don't drive through me because I want you to come back to me when you need money next time. So we just created that. And then for borrowers, we just said, if you've got a deal or you have a deal coming or, your deal's already funded. So we created the stoplight for both sides. And then, the whole idea of this, how many of you, and now I'm going to get a little personal so you guys can answer this, but how many of you, seriously, you don't have to answer it. How many of you have ever used a dating site? Be honest. eHarmony or one, I don't know any other ones, but any of you ever use a dating site? Steven? Okay, Aaron
I did in 2000. I did in 2000. Last time I did was in 2010.
And I know a lot of people are going to say, nope, never used one of those. But you know what? We've all thought about them and we're like, man, that's a good idea. Because back in the day, like if you wanted to find your significant other or you wanted to find somebody to date, like what did you do? It was a lot of work, right? It was a lot of strategy. We didn't think about it. It was just norm, right? There was no internet back in the day. So how would you do it, Stephen? Like how would you meet somebody back in the high school days? What would you do?
Well, I mean, you'd go out, you'd go to a party, you'd go into a restaurant or to the bowling alley or to the mall, right?
Absolutely, right? You'd be out, you'd see this cute guy or this pretty girl, like, and you'd be like, all right, you remembered that restaurant. And then you'd start frequenting that restaurant. Then you'd figure out the circles that person was around. Oh, Jim, you know her? Great. You talk to Jim. Hey, try to connect me. So then you go into the restaurant, you're just sitting there eating and, then you make the introduction. You remember how that felt? Remember the butterflies? The first time you went up and talked to somebody like, oh God, it was bad. Like, and that's how we used to do it. Then dating sites came around. The eHarmonies. And hey, then you just post your profile up and you just scroll through a bunch of profiles of someone else. You read what they're about, what they like, don't like, and boom, like you could connect right there. And then began the next process of going out and, building the relationship. But like, think of how that's changed. Like the way we used to do it and the way we do it now. Well, the same thing is true for money. The way we used to have to raise money was very different than the way we raise money today. And we're actually trying to take that and do a Elon Musk to that and make it so that the way things happen is completely different in the future. And that's what the Private Money Club is. So I'm just trying to get context. So Jade's saying 30 years from work. We met 45 years ago at school, no internet, the mall. Holy cow. Stephen, how did we forget the malls? Like, come on, how many? So seriously,
remember going to movie theaters, going to the movies together, and
how many of you used to be mall rats? Just be honest. Like how many of you used to go to the mall, hang out just to like look at the other girls or the other guys, I'm just talking to men or women, look at who was there. How many of you used to do that? Because I'll tell you what, I used to think it was the coolest darn thing to have mom drop me off at the mall and you walked around the mall, you hung out, you tried getting in trouble, you did stupid things. I remember owning stores, Fat Man board shops in malls. And we used to, we couldn't stand those mall rats because they were always up to something, stealing something. But we all did that. See, everybody's guilty. Yes.
The other good one's the roller skating rink. Oh yeah, somebody just said it right there as I said it.
Oh my gosh,
roller
yes.
Skating, yeah.
Oh, I used to do that
ice
too.
skating in Buffalo.
Oh my gosh. Now, back in your roller skating rink, was there always a place like in the back of the roller skating place where you'd go and you'd kiss like a girl or a guy? Like, I don't know, maybe it was just the place I went. There was always this one spot in the back of the roller rink that happened. Yes, makeout alley.
There you go.
That's what they called it, makeout alley. Oh, things are so crazy. But, we're just having some fun with this. And, things are crazy with money right now. And things are about to get crazier because when the whole market does start to go the other way, right now it's like straight up, but you're seeing the turbulence. You're seeing like right now, everyone, if you're watching the markets, you're seeing it ping ponging quite a bit, right? 1 week's up, next week's down, next week's up, next week's down, next week's up, next week's down. It's if you really think about it, is it really going up or is it going sideways with a whole lot of turbulence? Well, it's getting to the end of that megaphone, and if you look at the markets, it starts with the megaphone and it just kind of narrows down. The closer you get to that megaphone period is where the market's going to go down. It's easy to see. But when this whole thing does let loose, money doesn't just disappear. I think everybody already knows that. Vicky said sporting events, absolutely. Under the bleachers, oh my goodness. The beach, well, yeah, some Californians on here had the beach. Well, we have the lake. I don't know if we really spent much time there, but getting back to that, like when the whole thing goes down, money doesn't evaporate, it just changes direction. And where does money go? When a whole market collapses like 2008 or the dot-com crash or last March, where does money go? Stephen, if you were seeing the market collapsing and you had money, where would you want your money to go?
Well, the markets go down by people selling, so that sales go into cash and goes out of the markets. Like you said, money doesn't disappear. It just changes hands and changes forms. So goes from being in the control of that company when you're investing in the stock back to your control. And then what do you do with it?
Yeah. Money is always going to flow from the risky assets to the safe assets. Right now, money's flowing from the safe asset into the risky asset because it's a better return on their money. So money flows out of, let's call it US Treasuries, the thing you always hear me talking about. Money's flowing out of that. Money's flowing out of bank accounts and getting put into the markets. Why? Because bank account doesn't pay you much and treasuries are about 2%. It's not enough. Okay, so it's flowing into the market with the attempt to make more. And the government does a pretty good job of stimulating the markets by printing money, which does what? It creates asset bubbles. You've seen this happen. And as these asset bubbles go bigger and bigger and bigger, eventually when they pop, where does the money go? From the risky assets back to the safe assets. So if you're one of the people that said you're heads, where do you want money to flow? When the whole thing does pop, or even right now, when people are getting scared that something's coming, where do you want the money to flow? The safest asset. Well, what is the safest place for money? Outside of those couple places I just mentioned, isn't a tangible asset something you can touch, something you can actually latch onto? Isn't that a safer asset than a digital asset or, a stock that really just has a piece of paper behind it? Yeah. So that's why real estate has and always will be one of the greatest investments out there. Now, this works for just about anything. Private money club that we're talking about, this e-harmony of money, okay, it works not just for real estate, it can work for anything, but we're always going to just talk about real estate because it's just easy to articulate. You all know it, you understand it. It's a house, it's a property, it's got brick and mortar, a foundation, and it's got value. And that value, even in down markets, still has value. It doesn't go to zero like WAMU or any of the stocks that went to zero.
Yeah, there's so many fundamentals of real estate. I mean, there's a reason that all multimillionaires and billionaires own a lot of real estate in one shape, form, fashion. If you guys watched our, Money School Essentials preview, or you've been to our Money School Essentials 3-day trainings, we have 3 pillars that, basically everything's built on as the foundation. And one of those 3 pillars is real estate. And there's a reason for that. And that's why, Chris is, and we're not talking active, but we're going to talk all about that today, is being involved in real estate without actually having to, actually do the real estate part of that.
Yeah. So let me ask, out of everybody on here, how many of you are in real estate? I don't care what capacity of real estate you're in, but can everybody just put, yes, if you're in real estate in any capacity, a realtor, you're flipping houses, you own rentals, you're in real estate, not your primary house. Don't put yes if you just own a primary house. So let's see how many of you are involved in real estate in one way or the other.
Is anybody not? Is there any no's?
Here we go. Who is not? Okay, we got 1. Wes is in tech, not a bad area to be in right now. Okay, Mark and Dawn, and not yet. Okay, learning. Okay, so yeah, we got a bunch of people on both sides of that as well. So that's great. Whether you're in real estate or you're not, but the thing is like Stephen said, like it's a foundational piece of just about everyone. And in some of the wealthiest investors, or pretty much all the wealthy investors, in one way or the other, they are in real estate. Now, a lot of times when people think about real estate, what do you think about? Toilets, termites, tenants, problems, contractors, pipes bursting. You think about all the bad things, but what if you didn't have to deal with any of those things and you could still be involved in real estate? You literally had to never worry about a tenant calling. You never had to worry about a flood. You never had to worry about pretty much anything. But you were still directly getting paid from the real estate. Because why do we invest in real estate? What's the reason, Stephen? Why would you invest in real estate?
Passive income.
There you go. It's money. It's a great investment long term. And the beauty of real estate, and I always used to say this from stage, is the best part about real estate is it can never go to zero. You can always go there, touch it, kick it, scream at it. And there's also always multiple exit strategies. You can refinance it, okay, and kind of get somebody out of it. You can sell it, you can rent it and create income. So there's always multiple options. If your stock goes down, do you call the company and say, hey, listen, we need to go to a different exit strategy here. I need you guys to do something to create income so I keep getting paid. No, they're just gonna be like, look, business is tough. Like our stock's going down, sorry. But real estate, you can change things. So I'm not trying to sit here and preach real estate, but like just fundamentally, real estate is the backbone of wealth. It's where wealth resides at the finite bottom. I don't know what I'm trying to say there. But the other thing too that is important about real estate is what Stephen said, passive income. We all want passive income. All of you that said heads, You all want passive income. Even the ones that said tails, which are people that need money to make more money, you know what they're trying to do? They're trying to get money to buy rentals or real estate to make passive income. So why don't we just solve everybody's problem really simply? Why don't we just find a way to create the edge of the coin and bring all of you together? And that's it. So Stephen, let's get into a couple of the most current case studies. Don't you have what did that one person on Private Money Club say? Could you read that one testimonial? Do you have that up?
Yeah, I can pull some up for sure.
Yeah, pull a couple of them up. I'm going to talk about some ones that I'm working on right now. So
yeah, and I'll pull those up. And you know, the other thing before we jump into this is the timing. Like you said, you've been working on this since 2018. You had the idea, we talked about it in 19, 20, kind of developing it, and now it's coming out now. And just going back to what you're talking about with the markets earlier, how that microphone is all coming together. I mean, the timing for this is so perfect right now, because if you have money, if you're approaching retirement and you're in retirement and all your money's in an old 401k or a retirement account, I mean, it might be a time to look at directing some of that out of the stock market into some other types of investments. And this could be a great place for you without having to go do real estate, but doing what we're going to talk about in a minute, lending to real estate and taking advantage of everything where you can control the money. And I had if anybody was on my Money Club Mondays, every Monday I do a webinar at 1 p.m. Eastern called Money Club Mondays, which is all about private money lending and the Private Money Club. And we talked a little bit about it on Monday, but all the different sources where people are lending to the deals from. And one of those are self-directed IRAs. So just keep in mind, if you're unfamiliar with the idea of being able to move your retirement money to a place that's called a self-directed custodian, to where you then can use that to do this type of lending, just know that exists and we can teach you how to do that. Whether it's pulling money equity in a home, what's real estate doing right now? We're at all-time highs. So everybody has a lot of equity in their homes. That's lazy money. You've heard us talk about that before. Get that money out and let's get that money to work. There's so many different sources of funds out there that maybe you didn't realize that you can tap into and you can use to do exactly what we're going to show you here today, through direct lending, through passive lending, through getting involved in funds, to getting involved in large apartment complex projects, to new development. And there's so many different types of lending that's within the Private Money Club as well. So we'll get into that, but I just wanted to lay that out for everybody. Like, if you're sitting here right now and you're like, well, where am I going to lend money from? Or like, I don't have a lot of money in my savings. There's so many other sources out there that you can be tapping into. And those of you that might be borrowers, those of you that were the tails that need money to go out there and get deals, pay close attention, because you're going to be able to go out there and show other people, hey, have you ever thought about lending money directly in real estate this way? Even outside of the Private Money Club, or maybe you need some help with it. So you both decide to come into the Private Money Club and use our help to get those deals done. So, there's so many different aspects. So keep an open mind and let us kind of open your mind to some of these new ideas as we go here today.
Yeah. And I think one of the things too, that's important on that same note is to understand that, our whole lives, this has been there. I mean, the banks do this every single day. And, big money does this every single day, but yet we're never taught to do this. And, we're taught to give up control of our money to somebody else, and somebody else does this for us and makes all the money on it. And we get paid peanuts if you're even lucky to make peanuts. So sometimes you got to ask yourself, why don't I know about this? How come this isn't mainstream? How come not everybody's teaching what you guys are teaching? Like, it seems like if it was so good, everybody would be talking about it. But in that exact statement that you're thinking, or maybe somewhere you've thought about that, you need to really ask yourself the biggest question of all. The reason you haven't heard about this, the reason everybody's not doing this and talking about this, is because there's no money in it for the person showing you how. When you invest money in a stock, when you invest money in a mutual fund, an annuity, and any other product that you give up your money and give up control to buy, that person is making money. In this, it's a zero-sum game, right? There's borrowers and there's lenders. Like, in the middle, yes, there's mortgage brokers. You could be a mortgage broker and you could take your commission and everything in the middle, but we're not talking about that. We're trying, literally, what Stephen, myself, and this entire team at the Money School and the Money Multiplier are trying to do is eliminate all the middlemen. Literally. We want to just get rid of all the middlemen, all the people that take a penny here, a nickel there, a dime there. And at the end of the day, when everybody's taken, all of theirs, what are you left with? 10 cents of every dollar. And where did the other 90 cents go? Everybody else. Statistically, we need to eliminate that and take back the money we're giving away, which means we need to cut out the people that are nickeling and diming you. And unfortunately, that is a zero-sum game. When we get rid of all those people, we literally get rid of all those commissions, all those fees, all those extra things. Because in this game of being your own bank, you are the bank. And when you're the bank, you're the source, which means you have the knowledge. That's the only thing you need is the knowledge and the ability to apply it. You don't need anyone in the middle. Sure, there might be bits and pieces you'll need, an attorney, but if you're on the head side, who pays the attorney? I want to ask this for the glasses. First person that gets this right. If you're on the heads, you have money and you're looking to make that money work for you. You have money and you want to make more money. Okay. Who pays the attorney fee in a lending deal? Who's the one that pays that? There we go. Mary. So Mary, send us your address and I'll mail you the glasses. That's correct. It was an easy question. I didn't say it was going to be hard.
Mary's fastest.
The borrower. So Mary just has to send that. And you guys are all getting it right. You just got to be quicker, right? Yeah. You guys ever see Jeopardy? It's not about who has the right answer. It's who's got that clicker the fastest. So Mary gets that one. But yeah, so it's the borrower. The borrower bears the cost. The lender, the bank, the person who's the bank doesn't really have any expenses, do they? I mean, outside of maybe the expense of buying the private money club, but outside of that, what are your expenses? Nothing. You have everything to gain. Now think about a bank. Doesn't the bank make the lion's share of all the money with the least amount? They're using your money. Yes, they got the branches. Yes, they've got staff and all that. Put all that aside. Like they're using your money and lending your money out and making it. You can do the same darn thing. And that's what we're trying to help you understand, that you need to get rid of all the people that are nickel and diming you and learn how to do this. The reason nobody's showing this to you is because nobody can get paid to show it to you. And like for us, like I want to be perfectly transparent, Stephen, like the private money club is $997 to be part of it. That's per year. Now, some of you might think that's expensive. Some might be like, that's cheap, but for what it is, you make that in 1 month in interest payments, depending on how much you're putting out there, but forget about the cost. But outside of that, that's not why we do this. You see, we're smarter than that because we understand that the money is 6 layers deeper than that. The money's not on the front end. Matter of fact, we're going to offer Private Money Club eventually. We're going to have a free portion of Private Money Club. Now the free, I want to be clear, the free part of it, you're not going to be able to be the lender or the borrower. You're not going to have access to the tools that allow you to actually do it. But let's just say you want to be an observer, right? You can sit in the nosebleeds and you can just watch the show. We're going to have some free offerings like that. We're going to call it the freemium, and you're going to be able to just come in and watch it. But I guess what I'm saying is the simplest part of this whole thing of you being the bank, you mimicking what the banks have been doing for hundreds of years and making what, billions or trillions of dollars. I don't know. What are they making? Making billions or trillions of dollars. What did they figure out? Just one thing different than you. They figured out how to be in control of the money and how to move that money. That's it. You are all learning that. Every single one of you are learning that. Freddie, we'll get to that in a bit. We're not here to sell you Private Money Club. We're just here, to kind of show you what this whole thing is. So here's an interesting piece. A lot of lenders, the heads, okay, a lot of lenders think that they need, let's say a deal comes up and that deal needs, let's just use 200 grand. Let's say the lender, they both have profiles. A borrower puts the deal up and it looks like this. Okay, we got all the visuals. This is the perfect loan proposal. It's every piece of the deal, all right there. This deal gets posted on Private Money Club. And you're like, oh my God, I love this. This is amazing. How much do they need? 97? Darn it. I've only got 50. I guess I can't do that. The average person would just be like, oh, yes, I can't do that. That's two more than I got. Oh, next, I'll wait for that deal that comes along when, I can put this 20 grand. Because a lot of people are like, oh, I only have 10 grand. I only have 20 grand. I guess I can't do this. So they sit there and they wait for the $20,000 deal, which is rare. How many of you know of real estate deals right now with rehab that are $20,000?
I know 2.
You do?
2 are coming to the Private Money Club right now. Yeah.
Holy smokes.
They're seller finance. They just need the money for the rehab portion.
Okay, perfect. So, but that's a rarity right there. So if you only had 20 grand and this deal was $97,000, you'd just think to yourself, oh, I can't do it. But let's just say you're in a community where you get to know everybody and you have friends in that community. And all of a sudden you're just like, hey, Jim, you got some money in that self-directed IRA thing, right? Look, Jim, I got 50. That deal just posted for 97. Let's take that deal down together. So Jim and you come together and you lend on this deal for $97,000. One person put 50, the other person brought the rest. And you both go on the mortgage first lien position, being clear about that. If you're like Ricky Bobby said, I say it all the time, if you're not first, you're last, right? But then at the end of the movie, his dad was like, I never said that, Ricky. You know, there's second place, there's third place, you know, heck, there's fourth place too. But literally, like, you want to be in first position if possible, and you can do that. So you both come in and you do one mortgage and boom, done. Now, do you have to know how to write a mortgage? How many of you actually know how to write a note in a mortgage? Anyone? So let's chat in. I want to know, do any of you know how to write a note, a promissory note, or a mortgage? Anyone? Okay, no. All right, good. Okay, Lori knows how to do a note. She's probably done it a few times. Copy and paste. Yeah, that's good. That's a damn good answer, Aaron. Copy and paste, use a template. All right, so see, now some of the people that are commenting are remembering what Stephen always says, or maybe what I said. It's never about your actual resources. It's about how resourceful you can get. Cut and paste, templates. Correct. The means are right out there. But you know what? One additional thing, if you're the lender, who's paying for the closing cost and the attorney? The borrower. Who's going to do the note and the mortgage? Is it you? Maybe if you know, and you should learn how to, but who realistically is probably going to prepare the note and mortgage? Can anyone tell me who the most logical person to do the note and the mortgage would be? Who would that be? The attorney. That's correct. The bank. Oh, maybe I'm reading that wrong. Yeah, the bank, the attorney. Absolutely. Don't ever let the borrower do the note. Rule number one, if you're the lender, you control the terms of the note. Don't let the borrower do the note. That's right. Lori said title company or attorney. It's always going to be the attorney or the title company. And who's paying for that? The borrower is. So I know heads people seem to have all the, they get all the benefits. Well, they're the bank. The tails has to pay for it. Anything different about that than what happens today with your bank account? Nope. You're paying for everything and the bank is making all the money. Get used to it. So which side do you want to be on? The bank side, right? So, Stephen, did you get those couple stories up there?
Oh, I have some deals. I'm not sure. I have
deals.
so many different emails. It's hard to find the actual, but yeah, we can run through some deals for sure. So just to be clear, everybody that borrows money within the private money club and everybody that joins as a lender also receives the training and the templates for the perfect loan proposal. So the perfect loan proposal is what Chris was just showing. And this is a series of spec sheets and comps and everything you would ever need to know about the property, the subject property, about the borrower, about their company, about their experience, about their financials. Everything is inside of here. So everybody that joins the private money club will be going through the training that you receive with this to learn the perfect loan proposal. And that's what's used. So every deal, if you're a lender, you'll look at the deal template. And if you like what you see, then you can request the perfect loan proposal and it'll show you everything you would need to know to make an educated decision. And then you talk with that, investor, and you guys go ahead and negotiate the terms and put the deal together. So everybody gets that. There's some other stuff also part of the private money club. But with that being said, I mean, I could pull a couple up. I know there's some personal information in these, Chris. So I don't really want to share this.
I don't want to share the personal information. Maybe we can just share just kind of the look. I mean, I have one right here that I can kind of walk through, and I'll skip the personal info. But if you want to, I think I know what deal you're going to show. Don't get into the financial pages.
Okay, here's one. Here's one at 207 Continental that was already funded.
Oh, this is a great one. Yeah, show that one.
I think this is from Kevin, right?
Yep.
Yeah, so this one was funded really quick. I think all the deals that have been put in there have been funded already.
And just so everybody knows, Kevin right now, his company is RPG. They've been doing investments for a while. They're actually students of mine through the Flip Out Academy. And I don't know how many flips they've done. It's two brothers, and they do a lot of the work themselves, which is why their work is so good. But Kevin's very meticulous about the way he structures them. So this is a deal that already got funded through Private Money Club for 145. You can see the first page is just the deal. The second page is the spec sheet, which is something that's on, part of everybody. You get the spec sheet. It's a template that we've actually created. Then after that, he's got the deal rundown, which is again part of the spec sheet, just showing, hey, here's how much the deal cost. Here's how much the renovation is, the closing cost, the carry cost, all those things. Here's my estimated profit of $22,600 and some dollars. So you can kind of very quickly within a few seconds, because all of you are busy. Most of you probably have businesses to run or jobs, and you just don't have a lot of time sometimes. And then you might say, all right, well, what work are you doing? What are your holding costs? Right there. He's got it all laid out and color coded. I love this about what Kevin does is every single thing's color coded, and we all sometimes can articulate information differently, but if you just look at colors, okay, this color's this stuff, this color's that. It's really well done. And then this is always the best part, the before photos. How many of you love before and after photos? I don't care if you've done one deal, no deals, or hundreds of deals, the before and afters are always the funnest part. So these are all the before photos so you can see what you're getting yourself into. I know Mary's like, I love before and afters. Me too. And I just will never get sick of them. And then it just goes out to show the backyard. I mean, this was a great property, and Continental, is a Lockport. It's where I grew up. It's actually a nice neighborhood. They'll sell this house very quickly, but I mean, they've got all the information and, everything there. And this is how they would post that deal. Now, if somebody was interested in this, and there's the deal right there. So you see how he does it? Purchase price, rehab, total investment, sale price, lender return on investment, 12,000 broken down over, and he just kind of lays it all out and says over 6 months, the lender's going to make $10,000. And so he's saying 6 months because he's thinking that it's going to take 6 months. This right here, this is a template that you get for free too. It's part of the whole packet. Not only that, all of you that said you didn't know how to do notes or mortgages, I don't know if you can see me over the shared screen, but one of the things that we give is, here's an example of a note. We're not going to give you an actual one because we're not attorneys. So you need to go and have your attorney review it. If you're doing a joint venture agreement, there's the joint venture agreement. And then the mortgage also, we have all that stuff. And it's all just part of the resource guide. I'm just holding like a kit of all the little stuff that we printed out. I mean, it's just all part of it. It's super easy to articulate a deal. And then if you love the deal, let's just say that you saw that deal and you went to somebody else over there, because everybody that's on the platform knows who's a lender and who's a borrower. Your profile will signify that you're a lender or you're a borrower. And we're going to start mandating that when people come into the Private Money Club, their profile is completely filled out on what they want. So we're creating a template right now that is going to make it so you can't even build your profile without putting some information in there, so that if you're a borrower or another lender reads your profile, they know exactly like a range of how much money you're working with, how much you're looking to make, and then what your goals are. Because if we don't know the goals, we can't solve the problem. And then you just basically go out there and you do it. But after that deal's put on, we didn't show you the rest, but then there's the whole financial kit that would get sent to you privately through Slack because it's secured. If it's good for NASA, it's good for Private Money Club. So we use Slack to send that information, and that's where all the financials would go in for the thing. But again, everything is done for you. Like the system, the community, the Private Money Club software is going to basically make it so that everybody that posts a deal on there has to do the deal perfectly. I know there was a deal posted by, do you know if Steve's deal is finished yet? Like, did he get that one funded?
There's a new one on here from Steve.
Yeah, pull that one's awesome. Because that one shows the exact template, but again, be careful about the financials.
Yeah, this one's got, let me share it. This one has some financials, so I might have to skip through, but let me just share.
Yeah, see, Jamar was I'm glad he brought that up. Jamar just brought something up that I'm going to bring out. He said, make sure you read and understand the contract. For all of you heads that are on here, that means you have money and you're looking to be at the bank. Please, 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 if you're going to get into one of the deals, the first thing outside of this kit here that you look at, ask to see the contract, the purchase contract for the deal that they're buying. Thank you for bringing that up, Jamar. I mean, normally your attorney or title company should look at that, but it's very important that you read and understand a contract, because you want to make sure that you want to know, when does the deal have to close? Is that there a chance the deal will fall apart? So make sure you understand the contract, make sure you understand the note, and make sure you understand the mortgage. But that's a simple read through. So you can see here, this is the template. I mean, and Steve did a really fantastic job of explaining like who they are, their financials. Again, we're going to be careful not to show any of that, but you can see all the information that would be in there on this deal, the spec sheet, the comparables, the scope of work, what industry are they in? What is their strategic objective? All this stuff is template, right? We created all this. You just put your information in, and then there's the team, the leadership team. I love those photos. They're just awesome. You can tell these guys have done this a few times, right? Is this not somebody you'd want to lend to? Somebody that professionally articulates that they've done this a couple times, that you feel better about it. Here's their numbers, 19 years doing this, 200 deals from rehabs to small projects. So there you go. And there's some more photos of them and the work that they're doing. Pivotal operational principles. Like, what do they stand for? What are their principles? Just like Ray Dalio's book.
And one thing I'll mention, when you see a deal like this, so 8 team members working with 19 years of experience and over 200 projects done, someone like that has done it before. So, you always look at risk and reward. So someone like this, I would be a little bit more comfortable lending to on their terms. With Steve, I know that he's asking, I'll get to this in a minute. He's asking for, he'll pay either 10% annual or 20% profit of the deal, which is actually pretty unique and pretty cool. So worst case, you get 10%. Best case, you make 20% profit, which on this one it's almost about 20% in within 3 to 4 months, but I can get to that in a second. But the bottom line is, if you see one of these perfect loan proposals where maybe it's just, a couple, like a husband-wife team, or, somebody that's just like one person working, and maybe they've only done 0 or 1 or 2 deals in the past and only have maybe a year of experience. Well, that's the kind of person you wouldn't say no to, but maybe you negotiate a little bit higher terms, because it's probably a little bit riskier for you to lend your money to them. So instead of 10%, maybe you ask them for, 12 or 14%, or maybe you ask them for some points on top of that. Or maybe you would say, hey, listen, I have some, how about we partner on this deal and we share in some of the profits, and I'm willing to lend with you not only on this deal, but the following 2, 3, 4 deals. But I want a little bit higher for now, and then we can renegotiate those terms once you get a little experience under your belt. And there's nothing wrong with that at all, okay? So I just want you to, realize that there's going to be a lot of different types of deals and different experiences within the private money club. And that's, as a lender, how you want to start looking at these.
Yeah. And folks, everybody that's watching this, we got quite a few. How many of you would love for someone to send you a deal like this? You haven't even seen the deal, but just the way this is laid out. Doesn't this make it a lot easier to understand who you're lending to, what they stand for? Doesn't that make you feel better when you can read this stuff, the unique business proposition? Right. So this isn't magic, folks. This is how we figured this out. Is we just did enough deals, borrowed money from enough banks to realize, like, this is what the banks want. So why don't we just create the same darn thing? That's very true, Don, as long as the information's true. But in today's world, how difficult is it for you to do your due diligence on someone? Between Facebook, Instagram, all the social platforms, how hard is it to really kind of decide whether somebody's a bullshitter or for real? Now, I know there's some people that are really good scam artists out there, but usually we're going to try to vet them on the front end too, because obviously all the deals, at least at this stage of the game with Private Money Club, Steven, myself, our whole team, and including specifically Alan Jablonski, who's the underwriter, if you will, the consultant that's actually looking at all the deals and piecing them together for our monies. Do you think we're looking at every deal? Absolutely. Do you think I'm lending money on a lot of these deals? Yeah. So for example, a bunch of you, and I see some names, a bunch of you are doing some of those Chris Rude deals. We had 2 Chris Rude deals, and I was able to, I think, get the one deal funded. I think we got 4 investors on it. And the other deal invested 2 investors on that. But those are deals that I lend my money on. Those are deals I've been lending to Chris Rude for a long time. Kevin, I've lent money to Kevin on his deals for RPG. It just feels better. Now, it's not always going to be that way, but this is the early years, the early days of the Private Money Club. And I built it kind of so that I could blend my money too. I'm not dumb, and our team, all the people from Brent to everybody else, we're all looking for opportunities to move our money. This provides the platform to allow that to happen. But that's why I don't know where that one came from, Mary, but that's why I got off dating sites. Good point. She probably did the due diligence on some of the people in there and was like, I don't think so. You said you own a company with 300 employees, and I just looked you up on Facebook, and no, you don't. You work for, this company down there, down the street. Anyway, just kidding. So anyway, but that's the whole concept here. Now, are we going to hold your hand through these? No, we are not. This is on you. You have to be the bank. So the thing is the education is part of the program. Okay. So when you get into Private Money Club, you get the education for it. So you're going to be able to learn all the specifics. We also have a DM that's going to be in there. So you can always ask questions, kind of like trying to think of another site, not Facebook. My God, anyone ever have a problem with Facebook? Who do you call? Who do you email? Nobody. Don't call if you have a problem is basically the whole thing, right? So we're trying not to do that. So we are going to have a help support line where, like Alan in the beginning is going to be that. So if somebody has questions, you can just go in and type your question and we'll have like an auto chat that comes in and we'll get to the answers. But a lot of this, just realize like, it sounds good and great, but we're not getting in the middle of your deal. We're not charging points. We're not charging a piece of your percentage. Whatever you as the heads wants to charge the tails, or the tails wants to pay the heads, that's up to you guys. We're not getting in the middle. It's a zero-sum game. We are absolutely positively putting no one in the middle to take a penny from you. There's no toll outside of the initial enrollment, which is $997 for the entire year. And that's it. That's it. Eventually down the line, we'll have additional like add-on services you can do. Like, hey, maybe you're super busy running your company or working for a company, you just don't have time, but you want to move your money. Well, great. Maybe you need to pay an underwriter to underwrite the deals based on the specs that you give the underwriter. We're going to have services like that. Maybe you're a borrower and you just don't have the time to, that would kind of throw a red flag, what I was about to say. But if you were a borrower and you don't have time to put the kit together, I wouldn't lend to you. Just sorry. You should be able to put your own deal kit together if you're the borrower, but we'll have different services and each one of them will have different varying costs and fees. But for the main thing, if you're smart enough to just learn how to do this and you do a couple deals and you work with your attorney, not our attorney, we don't provide an attorney, like work with your own attorney, find yourself a good real estate attorney, a good title company, and just say, hey, listen, I've got this deal. This guy sent me this perfect loan proposal thing. It looks like a good deal. Can you just take a glance at this and let me know what your thoughts are? Always do your due diligence. If you're going to date somebody off of eHarmony, you're going to do your due diligence. You're going to go on the first date, the first dinner date and kind of do your due diligence and be like, yeah, no, that guy had 2 colored socks on. His car had 4 different tires on it and different rims on each tire. Like, I'm not saying that's it, but you're going to do your due diligence. That's the part here. We're not going to do it for you. This is an open platform. Do as you will, make as much as you want, and there's risk in this. So there's make no two ways about it. Like this isn't guaranteed, but it is secured if you do it properly. Don't ever, a couple simple rules, and these are all in the training. Never lend to an individual, period. Okay, don't lend to an individual. If somebody wants to borrow, and we would never allow a deal on there that's individual, but let's just say one squeaked through somehow. Never lend to the individual, you always lend to the entity. Second, never, ever, ever write a check or give money to the borrower until the deal closes. That's the biggest mistake I ever see. They get the note and they're like, okay, we're ready to go. Who do I mail a check to? And the borrower's like, you can just mail it to me. And you mail the check to the borrower. The deal hasn't even closed. The recordings aren't even done on the note and the mortgage. Like, are you crazy? Never give the money.
It's funny you say that because let me share real fast and show you. This is on Steve's perfect loan proposal where I just let off. But, she's talking about what is a private loan, who borrows. But check this out. Who handles all the details? We will. It's our job to get you proper documentation to protect your interest. All of this costs you nothing. The borrower pays all costs. The $20,000 loan is written to our lawyer in trust that never passes through our hands. So, like experience, though, he knows what he's doing,
Bingo. So someone like Steve won't have a hard time finding money for any of his deals. He knows what he's doing. But like what I was saying, he already has it in his perfect loan proposal. Like, don't ever give the borrower money until the deal closes. Matter of fact, the borrower should never touch the money. The money's yours. You're the bank. Okay. And just think about a mortgage like that you've gotten on your house. Did the bank just give you the money and say, hey, let us know when the deal closes? Good luck, pat you on the butt and send you out? Heck no. That bank is there every step until that deal closes. Then the deal closes. They make sure that the bank attorney files the recording. And who pays for that? That's right, the borrower. The mortgage gets filed, the note gets filed. And when all that's done and the bank has all the security documents saying that we control your ass, sorry, but like when you're the bank, you're in control. We control this deal now because we have this mortgage and this note. Now they give the money but usually the money just goes to the seller of the property. And if there's rehab money, normally a bank won't even give you the rehab money. The money sits in an escrow account with their attorney and gets paid out in draws. So as you start getting better with this, you might actually want to start holding back rehab money. Now, for me, usually if I'm not lending too much on rehab, I'll just lend the rehab money. Now that's probably too loose and you'll develop your own systems. But once you have all of this figured out, folks, how much time would this take? How much time do all of you spend watching the stocks, watching Bitcoin? Come on, be serious. How many of you have Coinbase And listen, I'm right there with you. How many of you have Coinbase? Just let me see it. How many of you have a Coinbase account or some type of crypto wallet or crypto account? Let me see it. Okay. Guilty. Look at that. There we go. So, and those are going to keep coming in. Some don't, but a lot of people do. Now, how many out of all of you, how many of you are actually looking at this at least 5 times a day? Because I mean, crypto, or even on weekends, you know darn well, most of you are looking at that, on Sundays. You're looking at your darn wallet being like, holy cow, it's up $100. Oh my God, it's down $2,000. Oh my God, I lost 50%. 5 minutes ago, it was up 50%. 5 minutes later, it's down 50%. Just kidding. But like, see, good. Catherine said, no, I have a life. But I mean, a lot of people do. I mean, so how much time are you spending doing that versus how much time would it take for you to lend money the way that a bank does, to learn the right way to do it? And then what do you do after that? Nothing. Just like I think it was Catherine that said it. I like Vegas or wherever it is, but she said, no, I have a life. Once you do the initial work, or your attorney, if you're smart, you'll have other people doing this for you. Your attorney, once your attorney does all the work, what do? You sit back and you just wait for the check to show up. What day is the check supposed to come? Well, that's up to you. You're the borrower. You set the terms first. If it's not there by the 5th, guess what? It's $100 late fee. And like after the 15th, maybe then you got to make a phone call. But I mean, how much time and energy does that take? Less time and energy than it took you with that Coinbase or that crypto account, because you're watching it all the time being like, oh, it's up 50%, down 50%. Listen, like, I'm not making this up. This is happening right now.
Let's play a game. Who would lend on this deal that we just showed you with Steve? You've seen him. Now let me tell you the details about it real fast. Or actually, let me just share the screen so you guys can see this. Can we do this, Chris?
Oh yeah, let's do it.
All right, let me show you exactly.
And folks, this is just a game, right? We're not doing this for real. If you're in the private money club, granted, you can. This
is available still right now. All right, so can you guys see this, the Slack screen here? So can you see that, Chris?
Definitely.
So over on the left is where all the different channels are. So if you have a deal, it goes in here. If you have money here, if you introduce yourself, if you're looking for partnerships, these are all the different channels. We have private investments in there, which are kind of like private funds.
Safari fund, mobile home park, and things like that.
Correct. Yes. So this one right here, guys, seeking funds for a flip in Fort Wayne, Indiana. It's 96. The price is 96,000. The rehab is 18,000. So they need 114,000 total. Based on 6 similar comps, 4 from the last 30 days, the average price per square foot is 121, which puts ours at 169K. Since our property has a larger garage, 3-car garage than the comps, all the comps had 1 or 2, and a partially finished basement, we should be able to get the price very quickly. It's a strong market as well. I know that because I'll show you something in a minute. Rehab should take just 30 days. We will pay the greater of 10% annual interest or 20% of the profit. In this case, that could be about $10,000 profit. And they expect to close in 3 to 4 months from close to close. Move fast, don't want to miss out. Attaches the perfect loan proposal. So here's what you do. If you're in the private money club, you read that. Okay, that sounds interesting. I have 114,000 to lend, or I have 50,000. I can find somebody else with 50,000 that we can lend. So I want to find out more. But before I look at the perfect loan proposal, let me learn a little bit about it. So you click this video right here. So I do video interviews with all of our borrowers whenever they have a new deal. So it opens this up. Can you guys still see that or not?
We're still looking at the deal there, the perfect loan proposal. We don't have the video up yet.
All right, so this pops up a video. I'll give you an example. I'm just not going to play this long, but so this is.
You might have to unshare and then reshare the video or something.
Right. So that's the video. So that's me and Steve talking about the deal for about 10 minutes.
Yep. Which we can't see the video, but normally you'd be able to see the video if it wasn't on Zoom.
Oh, sorry. It wasn't showing. Yeah.
Yeah. No. We're still just looking at the main things. We weren't seeing the video.
My apologies. So there's a video that opened up. And then if you like what you see there, then you can open up the perfect loan proposal, which I'll just showing you. And let me just stop this share for just a second, scroll past the financials. And let me pull up. So everything that you just saw is backed up by the actual perfect loan proposal. So hold on, I'm just getting past the financials.
I love it. Claire just mentioned, I have an excellent borrower who sends pics of the check and the tracking number, and it arrives by FedEx. Now that's a good borrower. And it's funny because me and Claire are lending to that same exact borrower. And I love it. He sends a text of the check with the FedEx envelope behind it.
Okay, so this is the property spec sheet that gives all the actual specific details about the deal that he just described. So if you want to see, what all needs done, all the comps, everything that you need.
Say something on this. If all of you can go on to Zillow and look at a real estate on Zillow, then you can understand this, because it's the same exact model. I copied Zillow when I created this. And I actually can't take credit for creating this. My wife, who's way smarter than me, created this.
So here's all the repairs that the property needs, the expected sales price, everything right down to the penny. All the contact information, and then just show some pictures.
It's a nice property. Look at that. I mean, that's a really nice property.
Absolutely. And then some of the different comps. And then you can look down through here. He's using PropStream, which is very similar to Flipping Edge. Some of you might be using Flipping Edge. So you just see all the details that you need, and then you can, talk to Steve about the deal. And if it makes sense to you, then you guys, like he said, he'll handle all the paperwork. They pay for the attorney, everything that's involved, and voila, your $114,000 is out for 3 to 4 months. And in 3 to 4 months, you'll get back 114 plus about $10,000. Move on to the next deal. And people like Steve will, if you want to continue, because he does 3 to 4 deals at the same time. So usually they have another deal that's ready right when that one finishes, that you can just roll right into the next one and keep it going. Because you always want to keep your money out there moving at all times. Remember that.
Yeah, but I mean, that's just like just a great example. And I'm glad he posted that and he showed that. It's just a great example. And we're actually building a custom website to kind of embody all this stuff. And it's going to have a very similar look and feel to many of the websites that you go on every single day. Well, maybe not every day, because some of you are actually, out there doing a lot, but most of you go on at least once a week. It's going to have a similar look and feel. It's going to be so simple that a 5th grader, I always want to say that a 12-month-old, my daughter, could figure out how to do it, but that's a bit aggressive. So we'll say a 5th grader could figure out how to do it. Heck, I want the upload process of a deal to be so simple a 5th grader could do it if they had the information to upload into it. Like it's got to be that easy. And the whole idea here is to simplify a very complex process so that more people can do what the banks do every single day. Because why do the banks do it? Because they have learned that it's the lowest risk way for them to make money. Now, does that ever fail? Yeah, 2008. How many banks got hurt in mortgages? A lot of them, right? So again, you got to kind of understand there's risks, absolutely, but you need to learn how to mitigate the risk based on your needs and your goals. And I think the best way to mitigate risk is don't do long-term big deals. That's my rule. I love the 6-month, no more than 12-month deals, because I know that they're in and they're out. The big one, where they send you the thing, oh, we got to replace the foundation walls. Oh yeah, a hurricane hit the house and took out 3 of the walls. We're going to rebuild it all. I won't lend on those. Oh, there was a big fire and it took out half the house and we're going to rebuild it. Nope, not for me. Like maybe there's a lender out there for that stuff, but I like the ones where like that photo, you look at it, you're like, wow, go in there, get rid of all the garbage in a dumpster, paint it, maybe some floors, landscape the sucker, out the door. Like that's my bread and butter. That's Chris Rude's deals. That's why I like lending to him, but Steve's the same. Kevin's deals are the same. You just got to figure out what works for you and what doesn't.
Yeah. That's one type of deal that's in there as well. We have 2 other types of passive real estate investing that you can, be part of also. So I don't know if we want to dig into that also, or just kind of talk about the direct private money lending today.
Well, I mean, you can hit on those. I mean, because, that's great if there's deals, but what happens when all the deals that go up there is no more? What eventually is probably going to happen, and it's been perfect now. We've got actually more lenders than we do borrowers. So we're trying to keep a nice balance, but eventually there's going to be, lots of lenders and lots of borrowers, and deals are going to get taken really quick, especially good ones like that. Like one day it'll post and then, 2 days later, it's already funded. But
and here's the other, here's the other reason we have other types of deals on the Private Money Club as well, is because, maybe you don't want to have to even do that little bit of work of evaluating the perfect loan proposal and, being able to decide whether you want to lend your money to that person and go through that process. And, maybe you want to lend your money longer term, because a lot of these flips that you see on here, you're lending your money typically for 3 to 6 months. You're going to put it out, you're going to get it back. You can roll it into another one, but you got to keep doing it. I mean, how many of you on here right now would rather just put your money somewhere for, let's say, 3 years and forget about it? just have a check come in every single month for the next 3 years, for the next 36 months, every single month, like clockwork. It shows up in your mailbox and you don't have to do any work. All you do is just give your money there, and it starts paying you every single month. Would anybody want to do that? And yeah, notes too. I mean, I didn't even talk about notes. We do have turnkey notes in there
eventually
also. But where
eventually
I'm going with that is the private funds. So we have a couple different investors that do private funds, and one of them is Chris Naugle himself. So can you talk a little bit about Safari? I know we don't usually do it on the webinars, but
yeah, and I normally don't talk about it on webinars because it's more reserved for friends and family, but all of the funds we do are Reg D funds. You can look it up, SEC, Reg D fund, okay, which means it's registered with the SEC. And what we do is we raise money for a specific purpose. What is the purpose of the Safari Fund? Mobile home parks. So Chris Rood is, one of the guys out there teaching how to do mobile home parks, but he's also a big mobile home park investor. So I partnered with Chris Rood, and we said, let's go out and let's buy more mobile home parks in the South. We don't buy in New York. We don't buy in California, just the South, Louisiana, Northern Florida, like Destin, different areas like that, all those areas up there. And we're going to move down into Florida, but we want to buy mobile home parks. And that's a lot of work. Chris knows how to do it. I don't. Chris buys them, redoes the trailers, buys new trailers, like fixes the whole thing, turns it over. So he's buying underpriced, beat up parks, transforming them into nice cash producing parks. So what we did is we just raised a fund for that. And the fund pays 7% for 12 months, interest only. Okay. So every month you get a check for whatever amount you invest. It can be invested through a self-directed IRA, any way you want to invest, really. That's the 7% option. 9% is 24 months. So you put your money away for 24 months, you get checks. And the last option is 36 months. And that's 12%. So why do we have different legs or different tranches of the investment? Because some people don't want to put their money out as long. And also some of the parks, we don't want to pay 12% on. Some of the parks, we're going to be able to turn really quick. And then we're just going to buy the investors out by refinancing the park with local community banks that we've built relationships with. And actually my partner in the fund, what we actually did to go an extra step on the exit, just because we wanted to make sure, sometimes as the lender, you want to almost fix the game. So what we did is we went to a big institutional lender, and we said, and they lend on mobile home parks. We said, listen, here's what we're doing. We're going to have turnkey renovated, mobile home parks. Will you finance them on the back end, in different areas? Absolutely. So we built that lending relationship, so that when Chris gets the deals done, we take them to this lending arm, this institutional lender, and they will buy out the investors of the fund on these parks. So you see, we kind of fixed the whole game. Now, that's what the Reg D fund is. It's called the Safari Fund. It's available to anyone. 15,000 is the minimum, I'm sorry, it's not available to anyone. Okay, I misspoke. It's available to accredited investors that are friends and family. Who are friends and family? Private Money Club members, period. If you're a Private Money Club member, you have access to Safari. And just for the protection to keep us, on the straight and narrow and doing this the right way, we are only offering it through that channel at this present point. And all the funds that we do are going to be offered on the Private Money Club, because that way you're a member, you're considered a friend and family. And as long as you qualify on the credited side, then we're good to go.
Here's what I like about it too. Besides being able to put the money there and forget about it for 3 years and just have the income coming in or feeding back into your IRA, and you just don't have to worry about it. But it's based around affordable housing, which, let's face it, real estate is crazy right now. It's a hot market everywhere across the country. Prices are driving everywhere, right? A lot of people you talk to don't think that that's going to continue, or probably can't continue. We talked about bubbles earlier a little bit, and how the printing of money, really drives those, and the very, very low interest rates that we've been seeing, as an artificial way to drive markets, and just everything that you see happening right now. So at some point, those markets will be corrected. So as real estate investors, one of the reasons that we buy real estate is not only for the passive income, by holding properties long-term through rents, but also through appreciation, the increase in equity over time, because over time, housing increases. So one of the strategies right now, at least that, myself and some of my business partners are looking at, are all the real estate that we've bought since the last crash in 2010. what homes have we had the highest gains on that are in areas that are topped out right now? And how many of those are way up here that the rents aren't quite matching up? So those kinds of properties we're looking at unloading right now because we bought them down here. They're now priced up here. One of the advantages of real estate is to get that appreciation. Well, instead of riding the wave back down, let's get out of those now, make all that money, that equity that we made over the time. And then let's go ahead and, sell those. And then, but we don't want to just hold cash because it could take 2-3 years before this market turns around, before we can go and rebuy these properties at a low price again. So what do we do over that amount of time? Well, we're looking at passive investments around affordable housing, because if you study history, especially if you look back to our last housing crash in 07, 08, when all that happened, the type of real estate, the asset class in real estate that held its value the strongest was affordable housing. So multifamily apartment complexes, 100, 150, 200 units, things like mobile home parks. Because guess what happens when people
Home parks,
lose their home? Yeah, I mean, through foreclosure or whatever occurs, people still need a place to live, right? They just need to downsize. And this happens every single time you see a market correction. So they still have to live somewhere. So those rents, those home prices, those properties maintain their values pretty well, where everything else comes down. So we're putting our money into different funds like this, into different investments like this, quick flips, things that can be done very fast. So if the market does turn, you're not stuck with that flip, smaller rehab quick flips. So we're putting our money into those kinds of deals right now so we're still growing it, and then we're prepared and we have access to it. It's liquid when the prices do come down, and we can start rebuying again to drive and then ride that next wave back up. So that's a strategy that I think, that's another reason why I think that the private money club, there could not be better timing for it, because the markets and everything that's going on with the economy, I mean, people need this right now. And we're pretty much putting it on a silver platter, putting it on a tea where you can just pop right in. You can just connect to us and you're ready to go. You're ready to get your money out there moving. So it's a beautiful thing.
Yeah, absolutely. So what questions does everybody have? Let's hear from the audience here. We still got a lot of people on here. I'm surprised. What are some of the questions you have? How about we go one step further? What are the risks you see with being the bank? Let's talk about that. Some people were talking about using self-directed IRAs, and, I saw some stuff about using equity in their home, the HELOCs, all smart ways to move their money. But what are some risks you see with this? Let's talk about, let's get the 800-pound gorilla out in front and talk about that thing, because there are risks. And what would be from all of you that's hearing what we've talked about, what do you think the risks are? And I'll just wait.
Kathy put one question and we can start with: if the private money lender does not want to be taxed on the profit, how would you manage it?
If the private money lender does not want to be taxed on the profit, how would you do it? Just lend from your Roth IRA. That's how.
Yeah.
Right. Did I say that right? So if you're the lender and you don't want to be taxed on the money you make on it, the only real way to do that is to do it through a Roth IRA.
Yep.
I can't think of any other way to do that.
No, not legally. You always want to do things the right way.
My risk is not knowing what I'm doing. Okay. And that should be the most common thing. And Dustin, that risk can be avoided and almost eliminated by you learning. And learning is very easy. You just here's the thing, Dustin, I'll tell you this, just because I'm not the smartest, guy out there. And, what does Brent say? The sharpest knife in the drawer, or however he puts it. But the one thing you also have to learn and understand is you're never going to be the person that knows how to do it all. You're not going to have every single piece of knowledge, which means you're going to need to associate with people that know more than you. Attorneys, title companies, CPAs from a tax standpoint. You're going to need to have all those people there. So you're going to learn all the basics in the training, which is all just part of the private money club. It's just we call it a 4-week training, but it's really not. It's just broken up that way. It doesn't take 4 weeks. Ronnie said, trust to trust. Absolutely. I hate to keep going back to eHarmony, but it's just fun to kind of correlate the two. You have to trust the person you're going to go meet for dinner too, and then when you meet them for dinner, you got to build trust. Same thing here. You don't have to, go out there and jump right in. You can just, build trust. This is a relationship business. And that's what the community's for. Heck, you can, you guys can just date over the phone, and just do communications. And then when you're ready to do the deal, you just go in and you do it. Same as Dustin. And, that's the big one, is the not knowing what I'm doing, but that's why you're here. So, when someone sits there and keeps saying, I don't know how to do this, I don't know how to do this, I don't know how to do this, eventually I got to stop them and say, stop. You're in your head. It's your mindset that's the mistake, not that you don't know how to do this. If you want to know how to do this, learn how to do it. And the only way to really learn is, first, you're going to study a little bit by watching the videos and the trainings. Second, get in a deal, do a small deal, put a little bit in, dip your toe in, try a small deal. The only way to truly master something is to do it. How many people do you know that win like a swimming race, right? How many people that can win an Ironman that have never swam before? I know it seems so stupid, right? They had to first learn how to swim before they could finish that whole thing. And it's maybe a bad example, but that's everything in life. If you want to do something, first you got to learn how to do it by actually doing it. That's the only way to master this. Let's see. So one here says borrower does not pay, files for bankruptcy, and I close my investment. So, okay, that probably is the worst case scenario. All right. So the borrower stops paying you. Okay. Then they file for bankruptcy. So now all their personal assets are off the table. But the first and foremost thing you need to understand is, if you did this properly, you have a mortgage on the property, a first lien position on the property. And remember, what did I say earlier? The number one thing you're not going to do is ever lend to somebody individually. So if somebody individually files bankrupt, does that have anything to do with their entity's assets? Typically, no. That's why people start entities, is for protection. So if you're a first lien position, sure, could that slow the process of you getting the money back? It could, but chances are it's not going to have very much impact. You're going to eventually have to take the property back, which is going to be an attorney and some legal costs. Okay. And then after you get the property back, what are you going to do? Sell the darn thing. That's what we're trying to say. So that would be the worst case scenario. I've never once had that happen, but I'm just saying, I'm sure it can. And if it does happen, well, you still have the asset. That's the beauty. If cryptocurrency goes to zero, does anyone have anything? Nope. If the stock you invest in, or the mutual funds, the stocks, the mutual fund you have goes to zero, do you have anything? No. If your real estate deal here, your lending deal, if the person stops paying you, goes bankrupt, what do you have? The property. You always have the tangible property. Let's see. Warren Buffett said, don't invest in something you don't know. And that is absolutely true. I don't know anything about lending, don't know of a real estate attorney that is reputable and reasonable with fees. And I know that there are lots of scammers out there wanting to take money from an innocent investor. Felicia, very, very smart that you realize these things. And now the next step is get those things fixed. All those problems, they are real problems, but they're in your head. Because if you think that, I don't know anything about lending, okay, how hard is it to fix that? How difficult would it be for you to learn how lending works? I'd say 2 hours. One YouTube video would do that. Okay. I don't know real estate attorneys that are reputable and reasonable. In today's world, can't you find a real estate attorney and interview 2 or 3 real estate attorneys in your area and then build a relationship with them? Yeah. And if you can't do that, well, then this just isn't for you. I got to tell you. And I know a lot of them are a lot of scammers out there. There's tons of scammers out there. And hence why you have to review the deal, why we've gone to, just great lengths to make sure that the lenders and the borrowers are credible in the platform to a certain extent. Some are going to get in that are going to probably not be the best quality, but you know what? Any of them that can build a kit like you just saw, they're probably doing this. And then you need to do your due diligence. So I totally understand that. But let me ask you this. How many scammers are out there, taking your money and putting it in variable annuities? How many, and I don't want to call that a scammer, but how many, people out there are taking your money and doing things with it today that you're already doing? How many of you actually, let me ask you this, Felicia, do you invest in mutual funds? Do you have a 401k that owns mutual funds? How much do you know about the mutual fund? You ever read the full prospectus? Do you know what the fees are? Do you know what a 12B1 fee is, a management fee? What stocks are you investing in? What are the risks with those companies? What price do they buy? How often can the mutual funds sell those and take taxable gains on that? All those things. Have you read the prospectus? Probably not, but every single person invests in 401k mutual funds. They don't have the slightest clue what they're investing in. They don't know that if that mutual fund family has one of the investment managers that's a scammer and stealing money inside. It's all relative. So it's all relative. Just trying to put things into perspective and to get you to think about what's really going on there. Apply knowledge and have I have a stupid annuity. Now listen, I'm not saying all annuities are bad. There's fixed annuities which are good. You just got to be careful with those variable annuities. I'm not trying to pick on annuities, but yes, do I think that they're way overpriced, buried in fees? Absolutely and absolutely. So careful with those variable annuities and those GMIB and GMWB riders. Anyway, getting off that one, went a little deep on that. Stephen, what else do we want to cover? Anything?
Let's see. If you sell a house but don't want to buy in today's market, how could you put the money into mobile home parks but be able to get to it if the market changes? You just do a short term. So do the 1 year.
Yeah.
Or do direct lending. I mean, maybe not the mobile home parks, but you could do some direct lending where, you're getting your money moving, but it's, back to you in 3 to 6 months.
Yeah, Felicia, that was a great answer. Thank you. Stephen, have we had any of the Q&As? Have you been hitting those as we've been going?
I'm going through.
Okay. So I know
we did have a question about moving 401k into IRA into life insurance and back. It's not really related to this, but
that's definitely one. If that's like a 3-step process, you should book a call with Stephen. We'll put his calendar up there so you can book a call. Like some of the stuff is just too involved to get out on a wealth webinar.
Yeah, just email me and we'll get a call on.
We'll
Chris, how do I get the book you were showing after getting the 3-day? I'm not sure if that's what they're talking about.
Maybe they're meaning like the different tools like this stuff. I think I don't know if this is what they mean, but it's all in Teachable.
Yeah,
so
it's all in File Vault and Teachable.
Yeah. This is just all the things in File Vault, just stapled together with a pretty little cover over it. That's all. The only way to get this is to come to Inner Circle, but I don't even know if we have any seats left for Inner Circle. There might be 2 more left. We'll put the link up. If any of you were, listen, actually, let me put this out there. I know I wasn't going to sell anything, but if any of you, I think there might be 2 seats left and I might be misspeaking. It might only be 1. Inner Circle is a live event here in July. It's strictly private money and teaching you how to be a lender or a borrower. It's 2 days live. It's, I think, $29.97. There's 1 or 2 seats left, barely, and I might be putting that. We'll put the link up. If you want to do that, that's what this is from. This is the Inner Circle Mastermind. As you can see right from the bottom, you get the entire kit and we teach you how to use every one of these. This event, who should come to this? Felicia, you should come to this if you were serious about this, because this event would teach you everything you need to know about private lending, whether you're a lender or a borrower. Not trying to sell the event. I really don't need to. I mean, it sells out every single time, but you can check that out. There's the link for Private Money Club. And then can you put up the Inner Circle one? So
yeah, just above there, I did.
Let's see, bought a duplex last year, which is appreciated by 30,000. That's awesome, Robin. Would you recommend selling it now? I don't know. Robin, that's kind of the simple thing in me wants to say yes, but how much are you going to lose to real estate commissions? How much are you going to lose to taxes? That 30,000 is going to be whittled down to 10, 15 grand before you know it. And how much can you really make on 10 or 15 grand? Probably not more than what you're going to make on the duplex. I'd say probably hang on to the duplex as long as it cash flows. So just trying to be honest with you. I mean, sometimes you really just got to run the math, and you got to also run the math, figuring out all the things that are going to cost you money to sell that property, taxes included, and then figure out, what do I net? What do I actually get to keep? Because it's not about what you make, it's about what you keep. And if that makes sense, then do it. In that example, I probably would say keep that. So just kind of in closing, there's the links. So we got the Private Money Club up there. Stephen, did you put your link for that one question?
Yeah, I put my email. Just email me, snaggy@chrisnaugle.com.
So just email him. And then if any of you we're really serious about the lending, but you were one of the ones that were chatting in, I acknowledge, I don't know how, I don't know, what this is. I don't know how to do it. I loved Felicia's answer. I was like, well, about the mutual funds. And that was kind of me just doing a rebuttal, and she nailed it. She said, that's the reason I don't invest in mutual funds. She doesn't understand them. All she knows is that history shows they don't beat the S&P. And you know what? She's right. She's absolutely correct. So she doesn't invest in mutual funds. That is a Warren Buffett thing. If you don't invest in something, you don't understand. So if you want to be a lender, understand what it means to be the bank. It's very easy. There's nothing hard about this. It's just different than what you've been taught your whole life. So when you first rode a bike, it was brand new. It was difficult, but you learned how to do it. When you first drove a car, it was difficult. You were scared, but you learned how to do it. Everything in your life, you didn't know how to do it until you did it. This is the same thing. It's like driving a car. Just get in the driver's seat, get yourself an instructor, Inner Circle, and go out there and learn how to drive the damn bank car. and we'll teach you how to do it. So with that being said, Stephen, I think I'm about wrapped.
Yeah, no, that was excellent. I mean, get into the private money club if you like this idea of being a lender or borrower. We're here to support it. As this thing grows, we have some really cool things coming with it. I mean, there's turnkey notes in there. There's turnkey actual real estate. If you actually did want to buy real estate right now to take advantage of appreciation and tax advantages and depreciation and everything involved, we have partners that can help you do that, from every step, from finding it to getting the renter in there to managing the property. But the direct private money lending, I just absolutely love right now. And the private fund, Safari Fund is just awesome. Seeing what Chris Rude's doing with that. And, but get in, get educated, it comes with Money School TV. We do a 2-hour group mentoring call every single month, where we talk all about money and entrepreneurship and lending and real estate and everything around that. So it's, you get a lot with the private money club as well that we didn't even mention, but you will get all that, and looking forward to it.
And then Mary, I didn't know if did you send your address? We need your address to mail the glasses to you. So make sure you send the message to Stephen S. Nagy. So Snaggy, he does it much better than I do, at chrisnaugle.com. So Mary, make sure you send your address so I can mail you out your brand new money multiplier, hot shot red glasses. So you can just be like Megan Mula and rocking it out on the next episode of the Banking Bachelorette. But with that being said, thank you all for joining us for this episode of the Wealth Webinar Series. I hope you guys enjoyed it. We put the links up there. Make sure you copy them and paste them, and we'll see you on the next one.